A very quick review, as you mentioned, for the first half of the year, actually the number of IPOs, are pretty flat, 600 plus deal globally year to date for the first 6 months. But as you mentioned, proceeds-wise, they're down 30+%. What we're seeing is that it basically is a lack of what we call the mega IPOs, those IPOs that attract proceeds of over $1 billion. So far this year, we've only seen 5, versus 20 plus last year's and 80 plus in 2021. That said, we are seeing, signs of the tide, turning a little bit, especially in the US market. Last Thursday, we have seen, 3 fairly good size, large size, 400 million deals, IPOs launched in the US market, NYSE. And all 3 of them, are PE back. 2 of them actually sort of fell below the IPO price on first day of trading. But since then, they have actually recovered and actually, move back up above the IPO price. So going forward, for the next 6 months, a very strong pipeline. We expect very large IPOs coming out from Shanghai, Romania. We expect an IPO probably to come out from the Romania market, a mega IPO probably in the next 2 weeks. There should be a big IPO coming to the London stock market, which is a very welcome sign as well. So we do expect with interest rate hoping to peak by the end of this year, there will be more certainty and investors will be more inclined to start, coming back into the IPO market. But with very high interest rate, what you are seeing is that obviously the valuation for technology stocks will be under pressure. And that's also a reflection that we are seeing why there are actually a smaller number of mega IPOs so far been launched so far this year.
Well, I want to get into that tech story a little bit more because there have been a couple of themes we've been touching on this year. One, what happened with SVB and the funding environment that changed quite rapidly. A lot of portfolio companies as well are concerned about the pressure they're facing from some of their sponsors, which is saying, look, get your house in order. You cannot keep on burning through cash at this stage. You need to focus on profitability. Very different to the growth story they're encouraged to chase previously. What does it mean in terms of some of these companies coming to market quicker than they would have in the past, but also with slightly different metrics on profitability?
What we are seeing, the change in the investors actually focus in the last couple of years, we would see, investors willing to invest in IPOs that are probably not expected to become profit making, in the next 10 years. Whereas, with the high interest rate and actually the valuation, investors now are much more focused on companies, even technology companies that are actually profit making, or at least there's a clear path to profitability and also with a strong positive cash flows. I think the tech stocks have actually been talked up a little bit recently because of a lot of the focus on AI and how, AI concept, AI stocks or way of actually adopting AI into your business. So that's actually another encouraging sign and helping to stimulate, more interest in the technology IPO again. That said, for the first 6 months this year, the technology IPOs are still number 1 by number and also by proceeds so far this year.